JB here, July 26, 2022. Hope everybody's doing outstanding on this fine afternoon, about 1:23 here in the PM. Just wanted to get on audio just to talk about a couple things, talk about the GDP definition being revised. Well, not the GDP, the recession definition being revised by the White House. Talk about Cigna Healthcare, Humana, United Healthcare, a little bit about Roku, AMLX, which have some later dated strikes, probably the furthest out calls I've had in quite some time. I'll talk about that and go from there. But really, first I'll talk about CI. So Cigna, they have earnings. Let's see what the date. I think it's in August 4th, right? So last week, well, the week before, United Healthcare reported earnings that actually bested estimates. Amidst that, an analyst came out and downgraded Cigna Healthcare, citing the slowdown in the economy. So if you're looking at what could possibly impact insurers, would be people losing their jobs. So if people don't have jobs, they don't have their employers won't pay for insurance, hence a slowdown in insurers' revenues, right? But that was not the case. We had the June employment numbers come out better than expected, so that bear thesis kind of got put to the wayside. Maybe next jobs report will show a decline. I don't think so. But I think that I think the stock sold off 4 or 5% on that downgrade, but it has since come back. And Humana reports tomorrow before the open, so I think that could be another catalyst for upside. Sold a lot of my Cigna calls already. I'm going to hold the rest. It's sitting here at 275 right in the money. I think it gets over 280 in the coming days. The unfortunate thing is only 3 days left till expiration. Wish I kind of went and encompassed earnings for their August 4th report, but maybe I'll revisit tomorrow after Humana reports their earnings. But just a great story. And I think there's companies, even if there is a recession, which we're going to find out on Thursday, I think there's companies you can say they're somewhat recession proof. And I think these insurers are one of those areas that won't face the brunt of a severe decline in revenues and all these fun things that are going on, job, so on and so forth. So that's Cigna. That's kind of why I added the calls on Friday. Lucky enough to be able to lock some of that in for profits and some freebies. So now I'm riding free into tomorrow. So I'll hold on to those. That's kind of the thought process there. Roku, unfortunately, went and got some calls yesterday based on their earnings report coming out on Thursday. If you don't know, of course, I love the Roku story. I think they're going to benefit regardless of what's going on in the economy. I think people are going to watch TV, whether there's a recession or not. And Roku's a platform that people use to watch TV. So if someone cancels HBO Max or they cancel Netflix or they cancel their Amazon Prime membership, I don't think that has any material impact on Roku because people are still going to be using that platform to watch their content. So unless they turn the TV off, I think Roku does well. And it's surprising to see some analysts come out this morning and downgrade the stock a few days before a binary event where Roku is going to announce their second quarter data, their 3 months of data, which is not publicly available. So for an analyst not to wait for that is just mind-boggling to me. But so unfortunately got the calls yesterday before the downgrade. I'm not sure if I'm going to add anything here. I don't know if I put it, I think I posted in the chat room. It reminds me of Netflix back, I think it was 2012. Netflix, you had the big fiasco. They got rid of their direct to consumer home mailing program as streaming was coming online. Consumers got upset about that. They had to their quick stir, I think it was called. Then they had to reverse course and resume doing that, and the stock just got destroyed all the way back into the 50s or 60s. And then you had Carl Icahn buy a stake. I forget who else. But then the stock went. That was it. That was the bottom, and the stock just went bonkers. I'm not saying Roku's at the exact same inflection point, but I think there's similarities there. And if you take a look at what's going on with people cutting cords and the addressable market of folks who are viewing content outside of the traditional content providers, cable providers, I think there's still a huge opportunity. And so we'll have to see how that all plays out. And you have those rumors. Business Insider came out a month ago around possible buyout intentions. Netflix is going to acquire Roku. Who knows how that plays out? But I think there's definitely an opportunity here. I'm not saying, I think it was 2012 I bought some. Netflix was trading at $80. They reported earnings. The stock went from $80 to $150 in 3 days. I think I had like 20 of the 120 strikes by Thursday or Friday. Those were like 80. It was a lot of money. I'm not saying that's the similar thing that's going to happen here with Roku, but I think there's an opportunity. And their cost structure is completely different than Netflix. So, as their transition from hardware to a software platform, and then all they have to do is monetize their subscriber base. It's a huge opportunity. But we'll see how that plays out. Maybe it's not this quarter. Maybe it's next quarter. I'm not going to sit there and try and add some more risk here into the earnings report, but I think there's an opportunity for Roku, and that's kind of my thought process there. AMLX. So this morning, Biogen had some news. The FDA accepted their priority review for their ALS therapy. I think it was their phase 3 data was horrible and was denied before. It's a very small sample size. It's a very rare affliction that they're trying to provide a solution for. I think it's like 300 people, something like that. It's very small, but I think it's kind of a signal, especially for AMLX, which had already been denied on their first AdCom, but they've been gifted a second advisory council meeting, where I think that's just a good sign for them. So that's why that stock's rallying. Look at Biogen, similar thing. I think the FDA is almost on the side of Biogen in regards to their Alzheimer's solution, their ALS drug, and I think, not to use the word dovish, but I think there's a more accommodative solutions that are coming out of the FDA, where they're going to approve more drugs as opposed to denying them. So I think that the news this morning out of Biogen, and it's probably the reason why it's up nearly 3%, and on the flip side, AMLX, which is up nearly 10%. I think those are the reasons those stocks are rallying, and I think AMLX is going to be over 25 in the coming days. And I might look for some Biogen calls before the day is out, because I think if it holds up here, and especially with the market being somewhat weak today, I think that has room for upside. I'm trying to think of other things. I mean, just crazy with the fact that if you study the markets, or over the last 15 years or so, 2008, with the recent situation with COVID, where we were in a recession. The definition of a recession was 2 back-to-back quarters of negative GDP growth. There was no question about it. It was the standard, right? So then this past Thursday, the White House comes out with some, I don't want to use bad words to refute anything. So I'll just say this: just came out with a memo that kind of retracted the definition of a recession, saying that it needs to be a holistic view. So you need to, not only do you have to look at GDP, but you have to look at jobs, and you have to look at inflation and imports and export data and all these other data points that were not part of the recession explanation before. And to me, if you look at GDP is the holistic view of the entire economy of the United States. So if you're looking at goods and services and everything that comes in and out, that's what GDP is. So for the government to come out and say, no, we're going to cherry pick data points so that we can say maybe we're not in a recession yet, it's just kind of comical. So, I'm not trying to be political. I'm not going to be on. I'm not either side of the fence. It just kind of rubbed me the wrong way. And the more I look at it, and I'm like, wow, this pretty much confirms that Thursday's GDP data is going to be negative. It's going to be negative 1.5. Maybe the estimates I think is 1.8%, negative 1.8%. At least that's what the Atlanta Fed Now site says. Maybe it's over 2%. So I think they're trying to get ahead of themselves to try and avert scrutiny and the whole firestorm that'll come out, because the data comes out Thursday. The whole weekend will be all about, hey, we're in a recession. So they're trying to get ahead of themselves and maybe argue that, hey, we're not in a recession. Unemployment's right near historical lows, and trying to make that argument. But I don't know. You're changing the rules mid-game. It's just kind of rubs me the wrong way. I almost prefer that we say, hey, we're in a recession, and we go from there, and the market, which already seems to be kind of pricing in some kind of recovery. That's the preferred outcome. Similar to what's happened with gas prices. We were going to have a gas tax holiday, whatever. In New York, there is one. But they were going to take back the federal gas tax, at least for 90 days, and kill our infrastructure. And then sure enough, what happens? Gas prices drop 50 cents. And then the government comes out and says, wow, gas prices at lows. And almost like they caused the decline. But then when it goes up, they they blame other folks. So just not a good situation. I mean, I guess if you're in their shoes, that's what you would do too. But it just drives me nuts. So hopefully we get out of this conundrum. Markets can kind of find some footing. Summer's always a slow trading volume. It's a season. We can find some footing into September when money starts coming back in, and then maybe, I'm not saying I'm gonna put my bullhorns on and we're gonna go back to 420 on the SPY, but maybe we can chop around and find some decent trading opportunities. That's it. Still have a few U strikes. That was great last week. Sure enough, what happens Friday? It sells off with the Snap advertising snafu, 25% decline in their ad revenues, and then U sold off. Does it deserve to be sold off? I don't know, I guess. But down here at 33 at 10:30, start to bounce a little bit back down to 33.49. Definitely a name I'll continue to watch, because I think if you look at names like you and Roblox, someone just Roblox, I don't even know how you pronounce it. Those are definitely names that I think will be relevant in the coming years. So if that's the case, then U is much higher, Roblox much higher. I don't really like Meta, but Meta, if they can, be at forefront of what's going on in this change from Web 2.0 to Web 3.0, certainly could be someone that benefits. And I think that's it, folks. I'm trying to think of other names. I've been watching Spotify. Spotify, I think, reports tomorrow before the open. People streaming music, definitely not going away. And not only that, they've kind of tried to monetize the podcast craze, which was hit its peak, settled down, still coming back. You have to think at some point Spotify is going to find its footing and rally. Probably not going to trade it into earnings, but I'll maybe tomorrow look to play that for upside. Chipotle after the close, you had McDonald's. Yeah, surprising. Strong comps. You're looking, are people trading off shopping groceries for McDonald's? I just don't see that that dynamic. So not sure. CMG is not really a premium casual dining restaurant, but I think there's a loyalty behind the brand, and people who do look to get Chipotle, I think they're pretty loyal folks. So I don't think they're gonna stop going to Chipotle just based on cutting back in discretionary items. So maybe that does well. The only issue is the premiums are insane on CMG. So I was looking at 1,500 strikes even on the weekly basis, and let's see what those 1,500s are now. The risk reward is tough. So you're talking, let's say, well, actually, they've come down. Well, they're down 60%. So maybe, not going to get them for $1.10, $200 out on money with 3 days and 2 hours left till expiration. Probably not the best risk reward, but I could see it going higher. I posted in the watch list this morning, $1.2 billion in cash, no debt, active share buyback program, which they bought a lot of shares last quarter. So, that's a great story. I think that's it, folks. I'll try to get back. Probably not today on the audio. I'll try to get back tomorrow, and then possibly ahead of. We have the Fed tomorrow. So, Fed decision 0.75 rate hike is pretty much a foregone conclusion. If it's 1%, I don't know, and if it's less than that, I don't know either. I think they got to just keep it 0.75. Kind of put in question any possible rate hike for their September meeting, which you would hope maybe that's folks can start, the market starts pricing, and maybe that's the last rate hike for 2022, pending any crazy inflation spikes or what have you. And then maybe there's some cuts at the start of 2023, and then that could be the spark to send the market higher. So that's it, folks. Let's have a great day. I'll try and get back. Rock and roll.